is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of the Trader's Edge, and thanks so much for joining me. Folks, if you turned in early and you were listening to the music that was playing ahead of time, you can guess where I was last night. That's right. I said during the show I heard that the Moody Blues were going to be in town, and so at the last minute decided to head down there and grab a ticket. You know, folks, I always talk about gratitude, how important it is to be grateful for everything it is that you have in your life. It doesn't matter whether you were on the right side or the wrong side of the trade, whether it was yesterday or any other time. All you have to do is wake up with a fresh attitude, take a look at the charts, see what the charts are telling you, and take some action. What kind of action? Take massive action. Now, folks, you can watch us on TigerTV. Now, we absolutely appreciate everybody that's listening to us on the radio. The benefit of watching us on TigerTV, simply that you're able to take a look at the charts that I'll be talking about, because I want to teach you. It's all about growth. It's all about living. It's all about giving, if you will. I want to be able to give you some great information, give you an idea of where the markets are headed or where they should be headed from a technical standpoint. And you can always give us a call, 877-927-6648. Now, an attitude of gratitude, folks, just put that one, write that one down. An attitude of gratitude, you know what that creates? It absolutely creates blessings, and that is really a great place to start from. And if you help others, folks, that will help yourself. That's why I am so grateful to be here with you each and every day, to get to be able to do this, to be able to help at least one person out there. And I know that it's more than just one person, but to be able to help somebody, it just helps me so much. It helps to create that energy, if you will. For me, that real power is just simply a sense of urgency. I hope you've got a sense of urgency as well. And make sure you bring gratitude into your life. If you take a look at yesterday, and I consider gratitude to be our most powerful weapon. And because when you are grateful, folks, what you'll do is you'll go out and help others. You take a look at what we've got, what we're surrounded by. I'm surrounded by a group of folks in the den right now, and they're all there at a moment's notice, willing to help in, pitch in, maybe help out. Maybe I'm not looking at something, point something out, whatever it might be. You can always try out the Tiger's Den. Absolutely a great community. It is always about stepping up your game, and the easiest way to do that, folks, is to change your peer group. Now, what I love, first I love being here, and there's no remedy for love, folks, other than to love more, and especially when it's difficult. If it is difficult, do it anyway, and do it now, folks. And what was so cool, actually, we'll talk about the markets. As far as the markets right now, markets are relatively flat compared to the fireworks that we had going into the last hour of trading yesterday. You've got the Dow futures, relatively flat, maybe up about 8. ES Mini down 1/4 point. NASDAQ futures up 1. Small caps off 1. The King dollar up 13 ticks right now. Gold getting hammered this morning. Gold trading down $49. We're certainly going to look at gold. That's out at $16.44. Silver off 71 cents right now, trading down a little bit stronger than gold, if you will, but trading down 72 cents out at $32.85. Light sweet crude still hanging in that $106 range. You've got, if you take a quick look around Asia last night, you had the Hang Seng finished down 31 points. No big shakes there. Finished out at 21,307. You had the Shanghai down 67 points. Nikkei up 151. That made a lot of sense when we take a look at the yen-US dollar currency pair. Right now you've got the DAX up 87 points. The FTSE up 20. Now, what was cool is the Moody Blues, folks. I've seen them at least 20 times that I know of, probably more than that. And last time I saw them was a couple years ago. Now, you got to love this. Here's a group of guys that absolutely, been touring together forever. 3 of the 4 are still together. One has retired. And when I talk about retired, folks, you're talking about guys 65 and 70, still getting up there, still kicking it, if you will. And the concert was at the Ruth Eckerd Hall. Now, I haven't actually been. Last night was the first time there. Small theater, beautiful theater. I don't know if it's got maybe just a few thousand seats or so. And I mentioned to Mike around the office here that I was going to go down and check out the concert. And he said, without tickets, he said, do they really scalp tickets down there because it's such a small theater? And I said, they always scalp tickets. Of course, I got down there, and there were folks looking for tickets everywhere. And so I went out, made this little sign, said need one ticket. Never done that before. Always have been able to scalp a ticket. And probably about, 5-6 minutes later, taxi pulls up. Guy gets out. and he was being dropped off the concert. He said, you know, today is your lucky day. Those are words I'm grateful to hear, if you will. Says, today is your lucky day. He said, you know, the guy was from CBS. His name is John. Won't give away his last name. He said, I came down here. He was doing a online dating thing. I forget which online dating thing. Was supposed to catch up with a gal from St. Petersburg. He said, that thing didn't go so well. He said, today is your lucky day, and look at these seats that I've got. And he said, so you need one ticket? You know, here is your ticket. Dead center, I'm talking dead center, eye level, you know, in a place that is acoustically perfect. Now, so we went inside, we drank quite a few beers, and what was interesting is here I'm sitting in, you know, just a beautiful, beautiful seat, beautiful surroundings, and the show begins, and the sound is just absolutely horrible. I mean, horrible. After the third or fourth song, I got up, went outside to, you know, find the person or persons that were running the board, which there was no way for me to get up to that room, just to let them know in a nice way that I didn't know what they were hearing, but if they came down to dead center inside this facility, you know, they were not doing the band justice or vice versa, but something needed to give. They went to intermission, they worked on it, they came back, and the sound for the second half was absolutely beautiful. And so just simply, you know, just great to be able to get out and then come back to these markets, clear our heads. So let's go take a look at the markets. Right now, up on my screen, folks, I've got the ES Mini. This is a continuous contract. And what we had yesterday, what you're looking at there is, and I know you've heard it, but, you know, it's a pattern that is out there. We've got to take a look at it, and it is a longer-term ascending wedge. We're just simply going all the way back here to the lows of November 25th when all of us had just simply a beautiful Thanksgiving. At least I hope that you did. And that starts the bottom of that trend line. The bottom of that trend line, the next area that you're going to hit is going to be December 20th, and then just simply on its way up. Now, from the top side of it, folks, you're taking a look at your descending tops. Ascending wedge, I apologize, your ascending wedge from the December 7th high. And then the next touch point that I just simply used is February the 9th. And what you can see is yesterday you had the ES Mini power up back inside that wedge. Looks like today what we're going to do is take a little bit of a breather. Of course, what kind of breather does this market really need? It's been breathing, if you will. It's been resting. The team has been resting, if you will, going back at least into the February time frame. Just simply go back to the February 17th area. You know, we have been trading sideways. We had one huge down day, if you will, on March the 6th. Well, I won't say huge, you know, a couple 100-point down day, if you will. Yesterday, obviously, a couple 100-point up day. And we're trading back inside this wedge. Now, what you did do is you cleared that May 2nd area. If we pull this back here, the top of the May 2nd, 1373.50, if you will, you cleared that. You cleared it with conviction. When I say conviction, with a nice wide bar, if you will, we know that there's volume in it. And if we pull this back, what you're going to see here, folks, is really the next area of any type of normal type of resistance would be back in the May 2008 time frame. This is inside the ES Mini. That would get you up into the 1429 area. And you'll see when we start taking a look at A, B equals CD patterns on some of the longer term charts, you'll see how all of that ties together. So I would expect that, you know, look, we're not going to have clear sailing. And today is really an important day because, you know, folks, what we saw with volume, there was volume to the downside on March 6th. And March 6th turned out to be a one-hit wonder. Nobody, you know, those make for good songs, if you will. But, you know, when you go to the dance, you don't want to just hear that same song over and over again, do you? No. So today is an important day in the markets. What you'd like to see, if this is the continuation of a rally, just depends on how you want to take a look at it. It's certainly been a rally coming off of the October 4th area. It's certainly been a rally coming off of the November 25th area. The market just simply recharged. So we're going to say was in the ES Mini was March the 7th. Is this going to be a continuation of the rally there? Well, folks, if it is, and just simply go back and take a look at the charts. Just take a look at where other rallies have started, just so that I can put this into a little bit of a perspective for you. So if we say, which we can, which we should, October 4th was a rally, and you can take a look at, you know, in that day, folks, if you don't remember it, there was fear all over the place. Fear, number one, excuse me, because you got down below the August 9th area. And if you take a look at August 9th, that was nothing than a cascading waterfall. That was like being in Hawaii looking at a waterfall. October 4th got below that. You pushed up. You created this piercing pattern. That's the candle formation that was out there. You had a rally attempt. What did you do the next day? You had follow-through, folks. Take a look at coming here off of the November 25th, coming back from Thanksgiving. What did you do the following trading session? Up and over on that Monday. What did you do the following day? You continued the move higher, even though only a little bit higher. Take a look at coming off of a little bit of a rally here December 20th. What do you do the following day? Sure, you maybe just do a doji, but you didn't close lower. That, folks, is a signal to take a look at. Was yesterday a one-hit wonder? I don't think so, but the market is going to tell us. 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. And let's just continue with the quick discussion about, we're taking a look at the ES Mini, so let me pull that over to the S&P 500, because all of you out there with charting packages, you're able to pull this up. I'm certain of that. And so I just want to, today is an important day because, one-hit wonders, folks, they make for nice tunes, but, you start looking for other music, if you will. And in this case here, we're just simply talking about rallies, rally attempts. What did yesterday mean, and how important is the day after? Are you... Well, I won't go there. But let's just take about in the markets, let's just take a look at the day after, if you will. So if we go back here to October 4th, that's where my cursor's at. Hopefully you're watching us on Tiger TV. And what you can see, there certainly was a rally from October 4th that went all the way up to that October 27th area. And certainly on the next day, you had follow-through on October 5th. If you just simply take a look at what happened when you made a low on November 25th, that's what we're looking at right here. Kind of hard to see, but that was this candle right here. Light volume day in the markets, if you will. When you came back in on that Monday, what did you do? You vaulted higher. You created a candle pattern out there, a reversal candle for sure. And then what do you do the following day? Well, the following day you at least close up. And if you take a look at November 28th, you closed at 1192.55, and on the following session, you closed at least up at the 1195 area. If you take a look at, and that rallied up into the December 5th area, you go ahead and you pull back. You make, looks like a 0.618, 786 retracement area, and then what do? You go ahead and start rallying on December the 20th. December the 20th, you close out at 1241.30. What do you do that next trading session? You close out at 1243.72. Are you seeing some patterns here with regard to rallies, if you will, and with regard to one-hit wonders? Well, the one-hit wonder, if you will, was right here, March 6th, last Tuesday, as the market came down a couple hundred points, and you did not have the conviction, you did not have the follow-through on March the 7th. It starts to slide back, and you can take a look at all different types of patterns that are out there. But the whole point is, when you take a look at today, and take a look at yesterday's action on the S&P, you want to see a close above 1395.95. And, if you do, folks, that is a good thing if you are bullish, because that is going to be a signal that, okay, in here, in this area here of March 7th, just like we were taking a look at down here in the December 19th area, inside the area of November 20, or October 4th, November 25th, if you keep pulling it back, it means you've got some nice patterns out there. You take a look at even the small one right here. If you come back into the August 11 time frame, remember August 9th, you made a low, the low down there in the S&P at 1101. Following session, if you will, it reverses, takes back all of that. Then you take off again the following day. You talk about that was the roller coaster of rides out there, and it did rally for a few days. It did close lower. That was not a one-hit wonder. You can do this and go back, and I suggest that you do this. Just simply, all I'm passing on to you is just a real simple, easy technique to understand follow through and conviction, whether it's to the upside or whether it's to the downside. And what you're going to see in all of those cases, that is going to help you with regard to your trading. If you're a short-term trader, especially, meaning, you're trading a daily chart or what have you, you're not into it necessarily for a longer-term swing, you're going to want to see conviction the day after, if you will, if you've had some conviction from the prior day. So hopefully that is one way to be able to help you. Now, If we take a look at the S&P, that's what we're looking at right here. Let's go ahead and we'll switch over to the weekly chart. Why the weekly chart? Week's not over, Steve. Oh, thank you. I appreciate that. It's not, but let's go take a look at what we do have. And what we do have is you have the S&Ps breaking up over the week of May 2nd. It's really the week of May 6th, if you will. And the high there, May 6th, 1370.58. You did closed out at 1395.95 yesterday. And folks, if you close out the week above that, what that is setting up is the smaller A to B equals C to D. And that's just simply coming off of the lows here from that July 2010 area. July 2010, real important area, because there we had two back-to-backs. It was really in August, if you will. It was really right here in this week, which was August the 27th. But that July 10th is going to be our A point for this A to B equals C to D. That A to B equals C to D takes you into the 1435 area. You are right now at 1435. You are right now at 1395. That is what I think is left in this move. And today, when you go to the daily chart, that is going to give you a clue, folks. Now, not intraday, but where the session closes today. 877-927-6648. Futures are flat. We'll see where this market's going to pop. King dollar, though, on the move. Queen euro sailing offshore. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You've got the Dow leading the charge, up 25 points right now. S&P is relatively flat, almost up a full point. You've got the composite up 5, small caps down 1. Small caps still not really enjoying the party that is out there. Apple, though, you know, NASA is back. The NBA, nothing but Apple. Apple up another $15 right now, trading out at 580, almost 583. Cisco up a couple of points. Google down up a couple pennies. Apologize about that. Cisco down $1 right now. And Apple is leading the charge. Now, folks, stay tuned today because absolutely it is Wonderful Wednesday. And it's a great lineup. Tom, again, is on vacation today, so I will be doing the Money Masters show. That's following. Then you got Mr. Basil Chapman. He'll be in the on-deck circle. Larry Pesavento, who is still in Philadelphia, I believe. He's going to be coming to us live with his grandson, or maybe he's on his way back to Tucson. Then from 3 to 4, David White, Ken Shreve doing the 4 to 5 hour. I will be doing 5 to 6. And that's because I'm also doing 3 to 4 with all of my clients. Every other week we do a live webcast and we take a look at a number of different things. Certainly what currently is going on in the marketplace. Maybe it's candle patterns. Sometimes it's lunar or celestial aspects. And so it's a great way. So if you are one of my clients and you can always get the archive of that. It's usually up within a few hours after the 1 hour live workshop that we do every other week. If we also, you know, the Moody Blues, they're on tour, but so am I. I'm going to be on tour. I'll be in Denver next Friday and Saturday. That's March 23rd and 24th, and back in Tampa, April 13th and 14th, and then in Boston, April 27th and 28th, doing a master trader course. And folks, what I'm so certain that I'm going to be able to help you, that I'm going to be able to take your game from wherever it is and elevate it to a level even beyond what it is that you're thinking, that I'm providing you with a money-back guarantee. I take all the risk. All you have to do is sign up and attend it. And if you don't think you got anything or you got enough out of it or whatever it is, it's unconditional, then you don't have to pay a penny. So go check that out on the homepage of TFNN. Right now, the Dow is up 15, S&P is flat. And so let's go take a look at the Qs out here. You can always give us a call, 877-927-6648. And then we'll go take a look at gold because gold is getting smacked around. Right now, gold is trading down $49 out at the 1645 level. Now, the Qs yesterday, the Qs being the lead dog in the house, the Qs came back into their range, if you will. Now, the range, really all that I'm referring to is this trend line. You know, and this is a nice 45-ish. This is one of your Daytona. You're in curve number 3 type of trends, if you will. You know, where it'd be pretty tough to walk up this angle, if you will. But the Qs have had no problem doing that. Yesterday, you catapulted back inside there. Now, one of the things that I pointed out last night when I did the 4 to 5 show, and this is something that you've got to watch for, and you take a look at it, it's on the Qs, it's present on the diamond, it's present on the SPYs. And that is this, folks, is that you have two gaps that are present. You've got a gap on the Qs from March 7th, the high out there, 64.21. You take a look at the low on March the 8th. The low there is 64.30. So all you've got is a little 9-cent gap, but it is a gap. So you want to mark that down. You then had another gap. That gap was between yesterday and the day prior. So if you take a look at March 12th, Monday, you had a high of 65.11. And what was the low in yesterday? 65.27. So what is that? A 16-cent gap in the Qs. Those gaps are relatively small. Why is that important? Because an exhaustion gap, where you have a third gap up, folks, in this case here in the Qs, which have been the lead dog in the house, it won't take much in order to have a gap up that is substantially higher than either gap 1 or gap 2. And when you have that, folks, oftentimes that is where you have an exhaustion gap. So you want to be able to watch that over the next several trading sessions and see if that occurs. Because if that does occur, and there are reasons for me to believe that this leg that we're in is going to be somewhat short-term. Longer-term, bullish. But from a shorter-term standpoint, folks, and certainly I gave you one clue to be watching for, which is today's close, and certainly we'll take a look at that when I come back and do the 5 to 6 o'clock hour. But one of the other things that you want to do out there is you want to be able to notate these gaps. And the Qs, it'll be real easy for the Qs to gap up because you got Apple, right? Apple leading the Qs, leading the charge, being the weight that's inside there. And even though it's only up $11 right now, that's only trading at $5.79, and I saw somewhere it said Apple's going to be trading at $1,000 here pretty soon. That might be the case. Let's go take a look at gold, though. Let's switch over to the gold contract, see what we have going on out here. And yesterday in several sessions, I have pointed out the importance of understanding different technical tools that are out there. And certainly one of them is the candle patterns. I love the candle patterns because they will show you shorter-term, longer-term reversals that are out there. They will broadcast the news before you ever see it in the news. In this case here, when you're taking a look at gold, when you take a look at the downdraft, that $100-ish downdraft that we had on February 29th, where gold went from a high of $17.92 down to a low of $16.88. So what is that? You have a $104 move in one day in gold. Of course, today, you take a look at the move. I don't have it here from the top to the bottom, but we can do that. Today, let's take a look at it. From the high, you were at $16.82, the low of $16.39. So you've already had, a 40-some-odd dollar move in gold. But here's the key. When you take a look at February 29th, it is the mother of bearish engulfing candles. This is the one that you would make a copy of and put in your next book if you were writing a book out there, or if you were just simply trying to teach someone about candle patterns and reversal candles and candles that you should be paying attention, okay, then you would certainly look at the bearish engulfing. Those are only going to happen during an uptrend at highs, if you will. That's what you had on February 29th. You took out just simply an entire month's worth of candles. That's where the body, folks, is simply engulfing the prior session. Usually, you'll see a candle that will engulf 1 or 2, maybe 3. When you engulf, folks, going all the way back, if you will, to January 26th, that's every single trading session between January 26th and February 28th. An entire month's worth of candles. That says, that is, you don't need anything louder, in my opinion, as far as a shot across the bow, then you are going to see lower prices. And so in this case here, what are lower prices? Well, lower prices, you just simply now start going back to normal retracement tools or ABC patterns. In this case here, you simply are going to go from the low that was established in gold during this move up. You're going to go back to December 29th, the low out there at 1523.90, all the way up to the high that was made on February the 28th. You got up to 1792.70. You also got up to 1792.30 on the 29th. So you're just simply taking your retracement ruler and you're looking at that 0.618 and really the 0.786. Those are the two areas that you would look for. When you have a bearish engulfing candle, it's going to take back an entire month's worth of trading, folks. To me, that's saying, you know what, you're going to do a deeper correction. Now, just a 1-to-1 A to B equals C to D on gold takes you to that 0.786 area. And if you take a look at now this move here, because that was a very quick move down, if you will, going from February 28th all the way down to the low, my B point, if you will, March the 6th. That was last Tuesday. That's when our markets had made a low, if you will. You had gold retrace up for 3 to 4 trading sessions. And now you're along this line. You're still along that same angle, if you will. And if you take a look at the retracement that gold did, you're going to see the retracement from the high, from our A point down to our B point, was almost exactly a 0.382. The 382, folks, is $1,712. Where did gold actually get up to? Got up to $17.17. Within $5 on a $1,700 asset. Are you kidding me? That's a beautiful thing. Now, so what does that mean? Just simply the 1-to-1 takes you into what would be considered a Gartley buy pattern. That would be at that 0.786. That would be in the 1581, 1588 area. If you can come into that area, folks, what you'd want to look at is you'd want to see some type of reversal candle, just like you saw a bearish engulfing candle here at the highs. What you'd love to see is a bullish engulfing candle. Now, what you'd really be looking for is maybe just a one-day bullish engulfing candle. Maybe it'll be a hammer. If you don't see anything or you're starting to come down in that area, because you've only done a 0.382, what it's really saying to me, when you only do a 0.382 retracement, to me that says you want to do more than a 1-to-1 A to B equals C to D. And when you do that, folks, that says you're going to be inside the candle, because a 1.272 A to B equals C to D is going to take you into that December 29th area. So your target to go long, if you're taking a look at playing the GLD, if you will, you're looking for a trade setup. What you're looking for is for the gold contract to get down into the 1562 to 1523 range, and you want to look to see some type of test of the low. That would be nice, and a rejection there, or some type of other reversal pattern, some type of candle. That is on gold. If we go take a look at silver, high-ho silver, see what we have going on out there. First, I've got to get rid of that chart because that wasn't silver. And we're taking a look at silver. Now, silver, folks, showing more resilience, if you will, than gold. Why do I say that? Well, if you take a look at March 6th right here, so our A to B, just like we had on gold, you had silver pulling down. Silver got down to a low of 32.49. You're trading out at 32.85 right now. You have not even been able to get down to the March 6th lows. If I pull back here, we take a look at gold, you're seeing gold is below that area. So if you're just comparing the strength and the weakness inside those two different metals, right now, silver is acting stronger. Now, if you let the silver out into the range, if you will, let it run around, and if it gets below, and really what I'm referring to, folks, if it gets below 32.49, what you're going to see with silver is you're going to see it work on an A to B equals C to D pattern. That A to B equals C to D, the 1-to-1 on silver, is going to take you down to $29.35. But if you were paying and watching, paying attention to what I was saying about understanding those retracement levels, and you want to understand that sacred geometry, if we just simply go from the high of February 29th in silver down to the low on March 6th, what is it that you see here? You see a 0.382 retracement. The 0.382 retracement, the actual number, the number on the button, is 34.43. What did silver actually retrace up to, folks? 34.44. 1 penny. 1 penny. Now, it doesn't matter whether it was a penny or was right on the number, but it is important because that's why I am so passionate, if you will, and absolutely passionate about you wanting to understand your sacred geometry numbers, your Fibonacci numbers. Why? Because, again, when you only do a 0.382 retracement, says that you can and more likely are going to do more than the 1-to-1 A to B equals C to D. That would take silver down into the $27 range. Well, if you get down there, that says you're going to go ahead and test the high of December 29th. That would be $27.84. But it has to break March 6th. If it doesn't break March 6th, then what you're going to create here is a sideways trading range. So real key on silver is whether or not it closes below $32.49. If we go take a look at light sweet crude, so we have going on in the crude marketplace out here, the crude marketplace is just saying, folks, you know what? You and I are going to be paying more at the pump, even with King Dollar up the way that it has been. And let's take a look at King Dollar here. Just let me move this over. King Dollar still up 11 cents, and we'll go switch over to King Dollar here next. You're going to see that even with the dollar up, it has done nothing to bring crude oil down. And crude has this strong sideways. It's building some cause right here, and the cause that it's building looks to me like it's caused to go higher. Look at the channel, this longer-term channel that crude is in. We have the breakout on crude from February the 21st. The low on that, and that's got an open gap out there. That was on the President's Day weekend. The low on that candle is 104.61. It's been pierced twice, but it hasn't been penetrated, meaning there hasn't been a close below it. It has rejected that area. Right now you're trading up near the high of that candle, that high of that gap up, which was 106.48. You're trading out at 106.45. So light sweet crude is really on its way up. If I take this chart here and we take a look at where light sweet crude is likely headed to, in my opinion, the way that this chart is setting up, light sweet crude wants to get back to $115. $115, folks. So, make sure that, well, I don't know, just make sure, it used to be great. Remember when Priceline came out? I think it was Priceline. When Priceline came out, you had the ability to go buy gas ahead of time. They had these, you could buy it ahead of time. You would have these gas stations somewhere, near your neighborhood, or maybe it was near your office, if you will. So it was like buying a futures contract for gas. I went out there and bought every single one that I could. I wish that deal was still around. It wasn't around because they were losing, their shirt, if you will. Let's go take a look at King Dollar. Enough reminiscing. Take a look at King Dollar. And King Dollar here, folks, got up over the area that it needed to in order to go ahead and start shooting up towards that 80. First 81.21 is going to be its next stop, but it really looks to me like it wants to get up to the $82 mark. What did it do, folks? It got above this bearish engulfing candle right here, February 16th. This is what you would normally see, a bearish engulfing candle that would engulf just one candle, not like gold, an entire month's worth. What do you have when you're taking a look at the dollar index off of the bottom? A bullish engulfing candle. 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. And before we went to break, we were taking a look at the dollar index. So I'm going to stay there. You do have the Dow trading up 24 points right now. S&P's up 1.5. Composite up 7. Small caps basically flat, just slightly negative. They do have the Gartley sell pattern. They do have the, I'm talking about the small caps, and the butterfly sell pattern still in effect, even with yesterday's move. They still are the weak link in the chain in order for this rally to really get going, just like it needed. We needed the financials to move off of their dime, if you will. You're going to need the small caps to participate. But let's go take a look at the King Dollar, the dollar index out there, because, you know, folks, it doesn't matter what chart it is that I have up on my screen. If we're blank, and I love this method that Basil teaches, that he uses, if you just simply start with a blank screen, you don't pay attention to what it is that you're trading, and whatever it is that you are trading, you need to be able to utilize this technique. I think it's one of the most important techniques out there. Why? Because most of the time, what you're going to do is you're going to bring a bias to the trade. And you don't want to bring a bias to the trade. You just simply want to be able to take a look at the chart fresh. Because when you can take a look at the chart fresh, you know, you're going to, and you're not really paying attention to what it is that you're trading. You're just interpreting the information that the chart is presenting to you. And that may, what that will do, what I know that will do is if you're getting different information out of there, then it'll make you go ahead and change your trade. Either get out, get in, whatever that might be. If you take a look at that chart and there's nothing, there's no other signal, you know, if things are behaving the way they are, then you stay in the trade, even if it's a retracement coming back, you know, to an area where you bought it at. Just simply, if that pattern is in effect, what you want to learn how to do is let those patterns play out. You really want to learn how to play the money game, and it's so important to understand what business you're actually in. But needless, let's just go take a look at the ABC patterns. Now, people say, well, how do you find the B point? You know, that's a question I hear often. Well, we know the A point. You can see this. It's where you see a market change in trend, and you can see that here on February 29th. You can see where the dollar index got down to a low of 78.12. That's after making a run down from the highs that were up here on January. So you can see here you've got a market trend. You've got this nice bullish engulfing candle. You engulfed how many trading sessions, folks? That's right, 1, 2, 3. Okay, so that's our A point. You can see you get higher price in the following session. This is like Basil's system of finding peaks, if you will, Well, the peak ended, if you will, on March the 7th. You got up to a high of 79.98. That's where it stopped making a new high. So that's one of the easiest ways to find where your B point would be. And sometimes your B candle can be both. The high can be the B and the low can be the C. That's not what we have in this case here. The high is the B. The low was the following trading session, and that becomes your C point. Then you want to be able to take a look at A to B equals C to D. On the tool that I've got present on the screen here, it shows expansions beyond that. It shows a 1.272 and a 1.618 expansion. You'll see I really keep things simple. I keep things simple by just simply taking a look at a set of basically 5 numbers, 382, 618, 786, 1.272 and 1.618. That doesn't mean I'm not familiar with some of the other numbers out there, but I just simply keep it simple when I'm doing my charting, if you will. And now what you would do is you would just simply take a look at the power from that B to C leg, okay? Meaning how powerful is your A to B. And you're just simply going to take a look at your retracement tool, go down to the bottom of that A point. That's at that 78.12. Up to the B point, and you're going to see where does it retrace to. On my retracement ruler, again, I keep it simple, 382, 618, 786. What you can see is King Dollar came down just slightly below the 0.382 area. 0.382 was actually 79.27. It got down to a price of 79.10. That says King Dollar wants to at least make a 1 to 1.272 A to B equals C to D. That'd be 81.47. That gets you inside that candle from January 13th, folks. I love being here with you. Stay tuned. I'll be up next for the Money Masters. If not, have a great day today, and I'll see you tomorrow morning, 9:06 sharp, folks. Take care.